All right, all right, all right. What's up, everyone? What's up, Top? What's up, Jay? Great to have you here. Great to have you here, finally. What's up, Salim? What's up, Marwa? What's up, Esal? What's up, Fajar? Fabian? I see you always. And the captain, Christian himself. Let's go. MMT members, let's go. What's up, Phil? What's up, Gizmo? What's up? What's up? Defeat Conformity. Nice name. I like that. I've been studying around 3 years ICT, Gizmo. What's up, Usman? How are you doing? Thank you. Thank you for the kind words, brother. Thank you. Appreciate that. What's up, Noel? What's up, Hydra? Hydra, great to see you, brother. What's up, Rajesh? Ryan, what's up? Let's go. Let's get it started. So, as always, of course, we start off with a weekly forecast, and afterwards we go over questions. In the meantime, we might drop some gems, etc., and we'll just see where it goes, right? I like to improvise these as much as possible, unless I truly want to touch on something very in depth. Then I also announce it. So perfect. Let's go. What's up, James? What's up? What's up? All right. Hope everyone is having a great weekend as well. Of course, we have to prepare for the coming week. Let me actually also grab the economic calendar. Where is it? Economic calendar. How is the week looking? We have Canadian dollar CPI. All right. We have an all right week ahead. Nice. All right. Looks pretty good. I like it. I like it. All right. Perfect. So let's start off with some weekly forecast. Of course, I like to start off my weekly forecast with the dollar. So the dollar here has been expanding higher, and let me explain what happened last week. And what actually happened, we saw this daily fair value gap. Now, I know Monday, Tuesday, and then Wednesday finally expanded. Why did Wednesday expand? Again, take a look at the economic calendar. Wednesday expanded because there was Fed Chair Powell speaking, and the Fed Chair, he had some volatility up his ass, so we finally got some movement. So right here, we came into that 4-hour order block like expected, and then we targeted this daily fair value gap right there. So this was a short move that could have been caught on EU. That's where I had my trade, and I think some other pairs as well. I was mainly looking at EU for that period of time. Afterwards, we had a big expansion higher, taking out this high. Is it unlogical that we took out that high? It's actually not. Why not? Because there's no fair value gap in this leg lower. So this high getting taken is not that crazy. And right here, the next thing I would want to see is we now created a weekly fair value gap there. So once we trade into that weekly fair value gap, I want to see how we react there. So do we reject it in the form of this, or do we fully disrespect it and trade higher? That is very important for dollar to see what will happen in the coming weeks as well. We've been in this range for a while now, so hopefully we can break out of it. Would be nice, but we would have to see what happens, of course. So that is it for the dollar. I'm still expecting lower price from a probability standpoint, and from my trading plan standpoint, I would still expect lower prices from there until I'm wrong. And when I'm wrong, the moment I'm wrong is when this weekly fair value gap gets disrespected. That's when I would be wrong. The bonds, again, huge consolidation. In this case, what I always do is ignore the bonds. Just ignore it. ES, all right. ES also creating a weekly fair value gap there. And we now have a pretty big rejection lower. So that is something to keep in mind. Same, a lot of these pairs and instruments right here, they are very dependent on what the dollar is going to do, right? So right here, I would still wait for the dollar to show its hand. If you are going to be trading, I would advise to trade the majors and the US dollar on a Tuesday. Monday, we could be a slow day. We don't have news on that day, so I would advise to trade on Tuesday. And from there on, see where the volatility comes into the market by the economic calendar. DAX swept these highs again. Now, target could very well be that fair value gap right there. Again, a lot of it is dependent on what the dollar does want to do. NASDAQ. All right. The indices, by the looks of it, had a pretty rough week right here. So NASDAQ right here, still heading towards that daily fair value gap. And from there on, again, same thing, react and adapt. We have to see how it is responding. So the same, sorry. So the same as what we saw on the dollar right here. When we came into that 4-hour block, we rejected away. That's the same thing that we would want to see on NASDAQ, etc. So a rejection away. And keep in mind, right, you don't have to trade that first day. When we trade into that daily fair value gap and we reject that first day and we have a wick sitting there, we can easily get involved the next day. We don't have to trade that first day, that first reversal day. That's not necessary, right? YM, the Dow. All right, so it disrespected everything here. And it is now returning back into that range. Again, if it is very, very rangy price action right here. So it's very, very confusing price action as well. Could be heading even towards this low now. Not that low, this low. And from there on, continue lower even. But again, a lot of it is still dependent on the dollar. So still have to wait for the dollar. AU. So AU came into that weekly fair value gap now. Delivered from there into that weekly fair value gap. Was pretty clear move. I think we touched on it in the A to Z guide as well. The only thing that I don't like here is see how low this candle closed inside the weekly fair value gap. No rejections at all. It's closing very low. So in this case, I wouldn't be surprised if we even continue lower, or right now it is very important to understand we might be stuck in a seek and destroy on AU. Why is that? We have had a consolidation here. We took this side of the range. What creates that? A breaker. And we took the buy side liquidity of the range. This is the perfect moment for price to now start to consolidate in a seek and destroy manner, and then eventually start a new move. That could very well happen. So be very aware of that. That could happen on AU. Again, could. Emphasis on could happen. EU, same story as dollar, of course, just inversely. We came into this weekly fair value gap, but I think, of course, if we are expecting the dollar to go lower, this is still drawn liquidity with that weekly fair value gap right here in mind. Could be seeing something like this, but again, would need more price action coming into the week. So what I do most of the time is I wait for Monday. Once Monday has set in, so Monday is usually what I love to see is a consolidation, and then afterwards you get a Monday sweep into that. Could be very nice. That's what I love to see. That's my bread and butter. GU, again, that monthly level right there is very close. We could still be heading towards that. And GU looks very, very nice to go higher. So weekly fair value gap, of course, overlapping with what? With an order block right there. So on this, now we have something to work with. So in the case that we have a range on Monday, let's say we get something like this on Monday, a consolidation, then Tuesday could be that move into the weekly fair value gap, into that order block as well. And then you get a rejection. And then Wednesday rejects even higher. Thursday potentially. And then just be very mindful that we could cap the week right there. So that is very interesting. I do like GU currently. I like it a lot. All right. USD Canadian dollar. So right here, we have been expanding for a long time. Now, the thing we called out last week was this fair value gap with the order block right there. We expanded lower off of that. If we do want to continue lower off of a daily basis, what do we see? What's up, Len? How you doing? What's up? What's up? So if we do continue lower right here, what do we see? We see this order block and this fair value gap. We have a nice rejection right there. So if we do continue lower right there, it wouldn't be crazy if we continue lower right here, but it also wouldn't be crazy if we now start to look to rebalance something on the weekly. So what do we do here? We can still take these trades lower. We can still take these trades lower, but we have to be applying very strict risk management. And Monday will also tell us a lot on what it wants to do. So here we can take these trades, but we have to apply strict risk management and keep in mind that it can reach for these weekly fair value gaps now, especially after 1, 2, 3 big candles already, a 4th down candle already. Momentum is slowly dying. Be very mindful that we could see either consolidation or we could see a week reaching for that weekly fair value gap right there. So that is something to be mindful of. That is why you have to be careful, right? In this scenario, you would rather be a part of one of these candles than all the way at the bottom right here. That's the same for if we now have 3 days expansion consecutive in the same direction, then you wouldn't look for the same direction trades in London session. Great to see you, JX. Great to see you. Great to see you again, brother. Great. All right, so again, USD-JPY as well. We came into that daily fair value gap that is sitting right there. So that is pretty interesting to see how we will react there. Again, same story. We do have right there, daily fair value gap. Now, this is the last line of defense, right? What we talked about in the A to Z guide. Last line of defense is right there. So we don't have to wait until we come into that last line of defense and then start looking for trades. If that does happen, we could expect an even bigger retracement, or keep in mind that we have a weekly fair value gap with that order block right there. So this is combining the time frames. You need to have an understanding of all time frames in order to get to your bias. Like I always tell you, the 4-hour needs to be in context of the daily. Daily needs to be in context of the weekly. Weekly needs to be in context of the monthly. So what I do here at the beginning of the week is I usually go over either a monthly if there's a new month ahead. So on the first day of the month, I usually do a monthly analysis. And then afterwards on a Sunday, so this day, today, I go over the weekly and daily mainly. And then on a Monday, I go into the daily and into the 4-hour. So that way I have something structured and going into the 4-hour time frame. And that's what a lot of people might want to see, me going into the 15-minute on a Sunday. That is absolutely not beneficial at all. I don't have anything to look at on a Sunday on the 15-minute time frame. There's nothing there for me. There's literally nothing. So right here, good still, we are expanding aggressively, very, very aggressively. So we could even disrespect this whole price action right here and target are these new all-time highs? Yes, they are. They are new all-time highs from what I can see. This is 2007. So from what I can see, these are new all-time highs. But all right, we could be heading there. From the looks of it, we might be heading there as well. We'd have to see what we do here. But this daily fair value gap, I'm not sure if it wants to hold. Could be heading towards that even. Silver. All right, silver is also pretty interesting, actually. We came into this weekly fair value gap by the looks of it now. All right, I like that. So what are we doing here? Well, the first few days, the first, very true, higher time frame is the mother of all analysis. Very true. I like that one. It's very true. So right here we have a weekly discount array. Then price will potentially seek a premium array next. So what do we do here? You can scout for longs here until when? Until you have a very clear drawn liquidity, which is a daily fair value gap sitting right there. So potentially even on the 4-hour, on the 1-hour, you can scout for entries potentially here until we reach that. And that is already one move in the week that could play out. And that is that could provide you a very nice RR for that week. So I do like this. Because we have a very clear ping pong play, as in discount premium array. Very, very, very nice. And then from here, if we do want to continue lower, we have a mitigation block on silver right there, overlapping with a daily fair value gap. That is already fair value for price right there. So we might continue lower off of that. All right. Right here on gold, we had a very clean. I'm not sure if anyone saw it, but we had a very clean. Thank God it's Friday setup, and right here, we were expanding lower, came into that weekly fair value gap again, right there. And then we had a very clean setup. And the main premise behind the Thank God It's Friday setup is here, of course, that we've been trending. So let's say, let's give an example. Let's say this was our Thursday right here. Then I wouldn't scout for Thank God It's Friday beneath that previous day low right there, because we are still inside this bigger range. Can you see that? Still inside there. Can you see the difference between this and this? Can you see how we are outside of this range in a sense? Remember the short-term low, the intermediate-term low. This is of course an intermediate-term low on the low time frame. So then we can expect a larger pullback potentially. Until when even? It's not very clear. I do see this daily fair value gap right there. So it could be a very similar situation as on the silver, that we come into that daily fair value gap and then continue lower. Of course, as well, very dependent on what the dollar wants to do. Bitcoin. So I hope everyone has been enjoying the ride on Bitcoin. Of course, it finally happened. Let's put it that way. It finally happened because we've been calling out this for a while now, and it finally actually happened. So what happened here? I actually saw a question on Twitter as well. Why didn't we come into the daily fair value gap? And the reason being, this is what we talked about on which pair was it? USD Canadian dollar, I believe. Yeah. So you see here how we are coming into that daily order block, daily fair value gap. It could continue lower off of here. That is order flow on the daily. But if it reaches into that weekly fair value gap and then continues lower, we wouldn't be surprised. Same on Bitcoin. If we were to continue here, this low is your float, or sorry, not your float, your lot, your last line of defense. So this shouldn't get violated on a 4-hour basis. But if it does reach into that, we also wouldn't be surprised. So right here, you are ready for 2 scenarios. So what you do is you don't wait for this daily fair value gap, essentially. You already scout for entries here, but your risk management would be on point, or either decrease your risk maybe, etc. So that is important. So you are aware of 2 scenarios potentially playing out. All right, perfect. So let me go over some things right here. It's been 2 years and I'm still not profitable. Currently started watching ICT, switch from supply and demand to ICT. Okay. ICT is where it's at, I would say. It makes things very simple in a sense. I've also traded for a short period of time supply and demand, and it more so confused me because I couldn't make it mechanical in a sense. EU daily inversion bearish, and this, I guess we're targeting sell side. Our first target is, yeah, we could very well be targeting sell side. EU and dollar currently, it's in a bit of a 50-50 territory as well. Right here, the main premise behind Bitcoin was, of course, this weekly level, and right there, this monthly SIBI that I've been wanting to see it trade to for a long time, a few months. So yeah, the reversal at daily order block, I guess, yeah, very well be true. Very easily. Are weapons easily purchased in your city? Ooh. Well, you have the macro mafia here, but so if you want a weapon, you can get a weapon, but I don't associate with any weapons. I'm just a trader doing my thing. Do you use IPTA data range? I do, but I don't pay attention to it. That's what I say a lot of times. If you go through my trade recap that I actually did on, I'm planning on do those to do those more often. On Twitter, I had a trade recap, and on YouTube and Instagram as well. But on YouTube and Instagram, they are shorter than on Twitter. And the thing is, I simplify a lot of things. That is important. Simplify a lot of things. How do you manage with delayed data? I personally don't have delayed data. I do have it currently because my PayPal had some issues. So it got canceled right here. But I would just advise to purchase it. Or if you truly can't afford it, just use S&P 500 data or something. For example, you had US 500 Pepperstone or Capital.com. It's also fine if you truly can't afford the data. But just know the data will give you more accurate price action. Sarah, which tool do you use to measure candle percentage? Do you mean this tool? This measure tool right there? This one? That is what I use if I do want to measure candle percentage. Ario, how can I refine using breaker block? What's up, Shelton? How can I refine using breaker blocks with FEG on my silver bullet times? Well, the thing is, silver bullet are mostly what you're talking about right now is a unicorn setup, right? So silver bullet is mostly the last entry before liquidity gets taken, for example. For example, if we take a look at ES right here, your silver bullet before this liquidity gets taken would, in this case, be here. But let's see if we have something on a lower time frame. Something around here is your silver bullet, right? It is somewhat in a discount, but it's that last move where price right here almost wastes no time to get there. It is very explosive. So a breaker block is of course all the way at the top. But what we do see here is we have some kind of breaker overlapping with fair value gap. So this could very well be a setup of yours, right? That's a unicorn. But the point I'm trying to make here is that a unicorn is a bit higher. If you're looking for bearish price, is a bit higher in the price lag, and a silver bullet would be lower right there. That makes sense. Was that a BPR on weekly on gold? Let's see. Was it? It was actually. It was a great spot. I didn't even spot that. It's a great spot by you. Thank you. You knew about the Thank God It's Friday setup before the presentation by ICT? Yes. I have not, just to make it clear, everything I'm telling you here, I have not watched any new video of ICT. So I am not aware. I know there's a video out there on Thank God It's Friday. And the funny thing is, I'm actually making a full trading plan on Thank God It's Friday for my mentorship. It's fully mechanical as well. And it is not based on anything. Yes, of course, I know Thank God It's Friday through ICT, etc. But the recent video I have not watched. So I'm not sure what is in there. I'm not sure about the rules, etc. As well the A to Z guide, because I saw someone mentioned the 0.2 and 0.3 level. And it was mentioned in ICT's Thank God It's Friday. And that's actually what I touched on in the weekly profile ahead of the video dropping about ICT mentioning Thank God It's Friday. So do with that what you want, of course. But I'm not watching any ICT content or anything. So it is all from the top of my own head, of course, being taught first by ICT, and now I'm developing my own things. So Thank God It's Friday. It's not ICT's video. I knew about it beforehand. Yeah. Can I show you trades from this week? Let's do it. Let's go over the trades from this week. So I'm also dropping a video on this one on Twitter and Instagram, etc. You know the drill. So I had a trade right here on EU. Right there. This one. 1, 2, 3. This candle, this Wednesday candle, and why the Wednesday candle again? It's because news. So if we drop into the lower time frame, we had this daily fair value gap there. We drop into the lower time frame. We saw this liquidity is not relevant, right? It is not relevant as in I knew I wanted to trade Wednesday because that is where the news was. So I knew this day, was likely going to expand. So I already knew this day. This liquidity is not relevant. You could say, yes, we swept liquidity. Yes, I know. But if I already know I want to trade on Wednesday, does it matter that we swept liquidity? No, not really. So right here, we come into it. We have my ST model. And then right here, we have another displacement higher. Right here, we swept liquidity again, right here in the form of Asia. And this fair value gap is where I entered on. That is my stop loss placement. Again, you could have said I've maybe gotten a bit lucky. Maybe I did, but I know what I'm doing. My intuition is pretty high on stop loss placement. So my stop loss placement, I always find is pretty accurate. So targeting these highs. And that's it. That is it. That is it. Voila. I took another trade though. I think it was a loss. I took a loss. So I'm not only taking winners, don't worry. I also took a loss. Let me see on which pair I took a loss. It was on, I'm not even sure. Which pair was it? Let me see. USD Yeah, this was the pair. So right here, we came into the daily order block right there. Right there. And on the same day, we were expanding right there. Now, on the Wednesday, we were expanding lower. Then on the Thursday, I was expecting lower price as well. Right there. Now, I'll actually go over this in depth because I wasn't focused. Now, let me tell you the full story. This is not an excuse, by the way, but this is me trying to understand why I took a loss here and trying to understand how I could have maybe improved. If I was just sticking to my plan and was focused, I would have said, all right, this is a loss, perfectly fine. But let me tell you the backstory here. The backstory is I was working on a one shot, one kill, and thank God it's Friday's trading plan for my community, for my mentorship. So I was up until 4 a.m. Midnight for me. So that is almost at the start of London. So you can imagine London is usually the morning for me. I was up to very late. So I wasn't focused here. So what happened is we came into that 4 hour value gap. And right there, we expanded higher off of news. So after 3:30, we had news right there. Then right there, this is normally a perfectly fine setup for me, or this is completely valid for me. But right here, expanded lower again. Right there was my entry. Covering there, targeting these lows. But the thing is, why I got blindsided and why I wasn't focused is because the thing we just talked about. We came into the daily fair value gap. So right here, I should have known. And what I've normally do is mark out this daily fair value gap and know that we might have capped the week on Thursday right there. And that's exactly what happened. So I also saw a question. Where was it? Did you anticipate dollar's sudden reversal and GU's bearish week? So right here, this is not a crazy reversal. Now, the thing is, though, I did not expect a huge move like this. That's what I didn't expect. So I did expect a rejection here, but I didn't expect a huge move like this. But I knew ahead of that time that once this candle closes, we had a weekly fair value gap to work with. Same as on GU. Let me show you. That's why I preferred EU over GU. And I'll tell you why. Is because this candle, we had 1, 2, 3. What creates that? A weekly fair value gap. We took out what? An intermediate term high. So this candle is pretty uncertain on if it will expand or if it will consolidate. And the next candle can come into that weekly fair value gap and then expand again. So that is also the same premise as on a daily base, right? 1, 2, 3. This candle is uncertain. Why? Because that candle can be the cause that we now create a daily fair value gap. So the next candle is likely where you want to get involved in. That is where the retracement and then the expansion happens. That's the same on the weekly. That's why I preferred EU over GU. But now I prefer GU over EU because weekly fair value gap, and then we have a clear drawn liquidity again. And when we reach above this high again, I would wait for the same thing again. So that is the full backstory behind it. So that is where I took a loss this week, and I took a winner on EU. So I'm still profitable. Yes, perfect. How do you use IPTA range? So everything that I target is already within IPTA data range. So with my order flow concept that I go very in depth in the mentorship, that is already within IPTA data range. And if you know, you know, sorry. And with the structure, etc., that we do with the float, with the lot, that is already within your IPTA data range. So for me to sit here and say, all right, let me measure the bars right here. This is 20 days right there. Sorry, this is not 20 days. I'm on a weekly time frame. 20 bars. All right, this is your first 20 IPTA, the short-term range, the nearby range. What's it called? So this is not relevant to me. Same as in this 60, it is not really relevant to me. And the 40, of course, also not really relevant because of the way I've structured my trading plan, in a sense. Or could you please touch up on dealing range and how to pair them with higher time from order flow to determine daily pies? Let's do it. So right here on GU, we see what? We have, this is not a great example actually. Let me go over another example. Let me use EU. So we had this daily fair value gap, right? We were expecting higher prices purely based off of the flood and the lot concept. That is already so responsible for my drawn liquidity, the flood and the lot concept. So right here, of course, paired with my experience and intuition, it's super strong. So on the lower time frame, what you will see is you will create a dealing range. Now, what exactly is a dealing range? A dealing range is a range that first takes out buy side liquidity and then sell side liquidity, or vice versa, takes out sell side liquidity and then buy side liquidity. What is sell side liquidity and what is buy side liquidity? Buy side liquidity, if we look at it from an objective standpoint, is what? A swing high. Sell side liquidity from an objective standpoint is what? A swing low. So, for example, it is a breaker. So this right here, when we swept this liquidity and we moved above it and had buy side liquidity, this right there is your dealing range. That is your dealing range. And then what a lot of people would expect is a move back into that and then continuation higher. Now, that's all there is to it. And then this is your dealing range here could be combined with your daily bias to get to a trade ID. And you would take the exact same trade as I did. So on the 4 hour, let me give you another example. It's basically the same stuff, right? Right here, you take sell side liquidity, then here you take buy side liquidity. This would be a range. That is your dealing range. And let's see if we can find another one. Yeah, buy side liquidity, sell side liquidity. This is now your dealing range. It is just somewhat of a breaker, or you can look up offset accumulation and offset distribution. I also have that is at internal and external, what I talk about in the A to Z guide. That's exactly a dealing range. Can somebody point in the right direction of data that is specialized in market maker model? I know a guy, Aryo. He's pretty good at explaining market maker models. BVBs, I'm late again. No worries, brother. No worries at all. It's you're here. Better late than never, right? Better late than never. No worries. Ryan and Larry, did you trade only in kill zones or any time of day? That's a great question. Let's put it this way. I trade kill zones, but if there's a day with a news event, for example on a Wednesday, I wouldn't mind executing a few minutes after London kill zone has ended. And why I think this is because I think kill zones are more so important if you're scalping on the 1 minute than on the 15-minute day trading. So on the 1 minute, you are very reliant on that volatility for that kill zone. On the 15-minute, you are more reliant on the kills on the volatility for that particular day. That makes sense. So yes, I do focus on kill zones, but I also sometimes rarely execute at 6 a.m. New York Eastern Time, for example. Ario video covered pretty much everything. The rest is submitting time. Mitch, my brother, you couldn't have said it any more perfectly. You said it perfectly. Like Mitch said, my video pretty much covers everything and the rest is submitting time. Oh, Mitch, I love you, brother. I love you. You said it perfectly. How can I know if it's going from internal range liquidity to external range liquidity or the opposite? And how can I know if I am in a bearish daily fair value gap, for example, and I'm bullish and got a reaction on 1 hour? So let me touch on the first, internal range liquidity to external range liquidity. That is a concept in the A to Z guide. I call it internal to external or internal. And it is also based on your float and your lot. So first off, you need to understand the higher time frame is the most important. So that is also touching on the second question you have. You have this daily fair value gap, right? On the 1 hour, we had bearish prices. What is stronger? Ask yourself. This is your hierarchy. In the top left, this is your hierarchy. The 1 minute, here's the weakest. The monthly is the strongest. the monthly will always win over every single one. It is like, what can I compare this with? It is sort of like chess, but chess can take everything out. There's very little chance in chess that a pawn will take out a queen, right? That a 1 minute will take out a monthly. But the monthly will 99% of the time always take out something that the 1 minute has created. So here we come into the daily fair gap. Which one is stronger on the hierarchy? Daily is stronger than the 1 hour. All right, the daily will likely completely obliterate everything that the 1 hour has created here and then continue the daily. Why? Because the daily flood and the lot was right here. So that is combining the time frames and having your 1 hour in context of your daily time frame. That is very important. So I hope that makes sense. And the internal range liquidity and the external range liquidity, what would then happen is you have your external here. And then what happens is you create a fair value gap. You have your internal range here. So you wouldn't expect anything to get broken here. This low should likely be protected, right? And then you target what? External range, which is this, which is also what? Very simplified. It is your fair value gap discount rate to the first opposing premium rate in the form of a swing high. The thing is, and I'm blaming anyone. I'm not personally attacking anyone. But the thing I want you to understand, the concepts that I'm teaching here, I have taken every single thing into account. Believe me, I've studied my ass off. So when you say something like IPTA data range or something and internal range to external range liquidity, the only thing that changes is the fancy names and the fancy concept. But I have taken every single thing into account and simplified it in such a sense that it is now understandable to anyone. But the only thing is, a lot of people think, and that's where I am misunderstood sometimes, I think, because a lot of people think simplifying is because you're dumb, you're an idiot, and you can't understand the technical science that these algorithm guys are talking about. And that is absolutely bullshit, because simplifying requires 100% of your brain, because you need to understand when you are hacking something. I don't know if you're familiar with hacking. When you are hacking something, when you are hacking into an account, into a website, do you know that you need to understand the full process of how the website works and how it functions to be able to hack it? Because that way you can spot faults in it and you can simplify it in such a sense that you're able to hack it. That is simplifying. Simplifying is understanding all the concepts and then being able to fully explain it in a simple sense. If you can't explain it, like Albert Einstein said, if you can't explain it to a 6-year-old, you don't fully understand it. So people that make it very tough, like, oh yeah, you need to have the third moon shining on your asshole because then we get an N-walk and then we get the Enigma fucking stupid shit. That is exactly when they don't understand it. When people are able to simplify, that is when people fully understand it. So I'm not trying to be egoistic or arrogant, but that's just me getting straight to the point, and I'm an honest guy. So again, it was nothing against it. I just wanted to tell it. Is there any difference between fair value gaps or imbalance? This is a great question. So usually what I prefer is a fair value gap. So what you'll see is you will, on indices especially, you will have a lot of volume imbalances. I personally don't like volume imbalances, as in I prefer fair value gaps over volume imbalances. So the only thing that is different right here, you could say from a liquidity standpoint, it's the same thing. Like we need to offer fair value because we didn't trade there, etc. And the only thing I would say is the main difference is that fair value gaps are stronger. They are stronger than volume imbalances, because volume imbalance could also very well be sometimes just a fault, a misinterpretation on price action. So sometimes on a Pepperstone broker, for example, you sometimes have a volume imbalance, for example here, but these might not actually be volume imbalances. It might just be the mistake of Pepperstone, because they can print this chart. So it might just be the mistake of Pepperstone that there's a volume imbalance. So it's not a universally agreed thing on that it is a volume imbalance, if that makes sense. Same for Forex, etc. So that is why I prefer fair value gaps always, because this fair value gap will show up on every single broker's chart. Every single one. If we take a look at capital.com, it will also be there, but the volume imbalance will be different. So it's a sort of guessing work. Then you could argue volume imbalance are just random lines. The fair value gaps are truly there. Great question, by the way. Hello, Ariel. Kindly go through the advanced entry on the EU this week. Yeah, sure. Let's do it. Let's do it. Great question. So there is advanced entries we use in the A to Z guide, right? So we came into the daily fair value gap. So what I would do here for the advanced entry, you would wait for it to come back above this line, that high, because then we have fully rejected it. We now see intention of price wanting to go higher. Right there, that is my entry essentially. So I waited for price to come back above it in a sense, right? That's a great entry. So you use that line, this line. So this wouldn't be an entry off of me yet, for me yet, sorry. So this right there, that is my entry because we reject above the fair value gap line. We reject back above the open, because otherwise what you'll see is a lot of times that's where people go wrong with the 2022 model. For example, if you take this liquidity point and you now start looking for entries there, that's the same as using that open of the fair value gap and start looking for entries here. But what a lot of people do is they start looking for longs whilst price is still in that fair value gap and price is just continuing lower, keep annihilating your trade, and eventually we go lower and then we disrespect the daily fair value gap. You have no invalidation level. There's no mechanical step-by-step guide to that entry in a sense. Hope that makes sense. I was able to make 20 USDT to take to, then I lost it till 70 to fake out. How can I know the price is faking? Well, first off, $20 to $126 is a crazy achievement. You need to know, you need to put that in perspective. That is like, what is it? That is like getting a 20K account and flipping it to 126K. That is absolutely incredible. And that is the reason why you went back to $70. And the reason why we don't do that here is because it's not sustainable in the long run. So congratulations on your achievement, but it's also a lesson, right? It's also a lesson because it is not sustainable in the long run. What traders usually do is you need to have a risk parameter. So you risk 1% or 2% of an account. So in that case, you would only risk 0.2 cents. Of course, that is it's very hard because it's only $20. And if you like to flip accounts, then go ahead and use $20 and just try to flip it. Of course, be my guest. I'm not here to hold you back. So how can we focus on not getting faked out? It's by knowing the higher time frame, because if I know the daily fair value gap wants to expand higher here, at least that's the probabilities, that's what price is telling me, then the 15-minute will have fake outs right here. These, the continuation lower, 15-minute here is bearish, but these are all fake outs. I'm waiting for bullish 15-minute. That's the easiest way I can explain it. Jeez. Which trading view chart should I use to trade NASDAQ on funded next stellar challenge? First off, great luck with your challenge, my brother. Great luck. I wish you the best. Keep me updated. I hope you come back to the live stream one day and you say, hey, I passed it. The thing is, you can just use ES data if you want on CFDs. So Funded Next is a Forex and CFD broker. I think they use 8cap, if I'm not mistaken. Correct me if I'm wrong. Or their own broker. So that is Forex or CFDs. Then price action. The prices itself, so the price on the right, will always be different on every single CFD broker. So the candles will be similar. So enter off of this and just have your MetaTrader next to you. And once you see something happening here, for example, into that fair value gap, just enter and cover the same high as on your MetaTrader, on your broker. And it will likely be the exact same because the candles are very similar. The only thing very different is the price action and the actual prices itself. So here 1.5 might be 1.4 even. So just focus on the candles itself. Let's see. What is if I had to take one setup for live setup? A lot of questions. Let me see. I know Aro is really good and I've learned a lot from him, but I feel like the market maker model is really for me. The way Aro trades in general is not for me. All right. Can you explain again why BTC didn't come and continue expand? It's a 4-hour order flow mainly. The difference between drawn liquidity and liquidity, and I would argue, is the same thing. It's both. A liquidity run, you could say it is a sweep of liquidity sometimes, but usually a liquidity run implies that we are continuing lower. So a liquidity run, for example, if we are aiming for this liquidity and we are running it instead of sweeping, sweeping is when we reject higher, right there. And running liquidity is when we continue lower. Do you only take fair value gaps that are on a premium discount of displayed on low time frame? No, I don't. I just enter on the fair value gap itself. I don't need to have it in premium, in any specific premium or discount for myself. What's your A plus entry model, bro? Oh, great question. So let me go over that on EU. Let's do EU this time. So this was my A plus entry pattern. This is my A plus. This is my bread and butter. This is my everything. This is, if I had to take one setup, like you say, Sheldon, if I had to take one setup for live, this is it. So right here, we still came off of a monthly SIBI, I believe. Yeah, monthly SIBI right there. Then on the daily, we were expanding lower. Then we had a Monday consolidation here. And the reason I like this is because Monday closed pretty high. So it was an up candle. That changes a lot. And then on Tuesday, we had a news event. So that is where the volatility comes in. Right here, we have a fair value gap, previous day high sweep right there. And then right here on the 15-minute, we came into that. We had my ST, then we had right there lower prices. And then off of a fair value gap that is sitting right there, covering the highs. This is my bread and butter, my A plus. This is absolutely beautiful. This is, if I had to trade one thing only, I would go daily and then 15-minute entry right here. This is the only thing I would trade. It's absolutely beautiful. And then the previous day high sweep into daily fair value gap. I love fair value gaps. That is, the point is, I love fair value gaps. I love to work with fair value gaps. So this is the exact same type of setup, right? Close right there. Boom. Staying into that. It's of course different days right there, but it would be the same premise. Right here, expand higher, voila. And then here, something like here would be the entry. This is my A plus entry. This is my absolutely my baby. Beautiful. I love that. Love that, love that. How important is intermediate term high / intermediate term low in deciding direction on lower time frame? Sorry if it too pretty important, but intermediate term high and intermediate term low is completely irrelevant without looking at the higher time frame first. So if we have, for example, if we have this daily fair value gap, the intermediate term lows and intermediate term highs on the lower time frame will already make more sense, and they are just to get you in sync with price on what the higher time frame is doing. That's very important. I've really been struggling with 1 to 100 leverage on prop firm. Could you please touch on trade? If you've been if you've been struggling with 1 to 100 leverage, is there a lot size limit on? Because 1 to 100 leverage should do the job. That's more than enough. So unless you have a very small stop loss, like I'm talking zero below sub-zero 1 pip, then I can see why you're struggling. But check if there's a lot size limit, I would say. If the prop firm allows you to trade above a certain lot size, because 1 to 100 leverage is more than enough to work with. Is there any difference between fair value gaps or, oh yeah, is that one? Or can you explain? All right, can you explain price? All right. Did you trade on, where have I gone? Where am I? Did I get lost in the questions? Mm, When to take consecutive candles as order block and when to take a single candles order block. You just answered your own question, my friend. When there are consecutive candles, you take that as your order block, and when there's a single candle, you take that as order block. Bank Nifty, let's do it. I haven't watched a Nifty in a long time, actually. Is this the right one? I should have taken the other one. I'm not sure. So the thing I don't like about Nifty is the gaps. There's so many gaps. So I get a lot of questions. What would I do here? Is no gap candles and just use this and use them as fair value gaps instead. So you can also change the colors to the right colors that matches your chart. Let me see. Whoa, what is my body? A candle color. I'm not sure actually. Order. I don't know. All right, I messed it up. Let's just leave it like this for now. All right, Nifty, where are we coming from? Did we sweep this high? Am I looking at the right Nifty actually? I'm not even sure. So right here, what do we see? We have a weekly fair value gap sitting right there. Also here. Sorry, the gaps are messing with my brain. Weekly fair value gap right there. Could sting into that weekly fair value gap. So that is already what I'm thinking price is heading towards. So the reason I'm doing this is because this already is my drawn liquidity. That weekly fair value gap. Then I'm just looking at the daily. How can we deliver towards that daily fair value gap? Or that weekly fair value gap, sorry. So right here, once Monday closes, we have a daily fair value gap sitting, a bearish fair value gap sitting right there. That could potentially deliver towards all this liquidity as well. So I would look at that. That is what I would look at. Exactly that. It will hardly take 5 minutes. I'm from it. Yeah, no worries, brother. No worries. I'm on. Love doing it. Yeah, a lot of Indian people trade Nifty, right? It's of course logical since it's your thingy, right? Love to see that. USD I think I went over it, right? Or let me take a look right there. Let me see. This could very well still head lower. Let me remove the thingy right now. This could very well still head lower over here, just sweeping that high. And again, the sweeping of the highs are not that illogical because we had no fair value gap in the leg. I think a way to define ST under different conditions would help. Also understanding that the market don't have to complete. They can. Yeah, very true. Very true. And again, if you want, I have an old video on market maker models where I dive into it completely. That's all you need. But yeah. The market here is open only for 8 hours. Oh. Driven as US Forex, so your analysis can be helpful to know if I'm in. Yeah, I think you're... Alright. That's interesting, actually. Only 8 hours. Why is that, actually? That's funny. I like that. Probable entry on USD Yeah, exactly. Is that a breaker block plus fair value gap on 4-hour USD? Where this one, that is a breaker, yeah. This would be a breaker block right there. With the fair value gap. Yes, sir. For sure, for sure. Hey, I love your videos and how simple you make them. Hey, love to hear it. Love to hear it. Thank you. Thank you. I catch the EU move on Wednesday thanks to your weekly forecast last week. When is the mentorship opening again? Love to hear that. The basic is always open. So if you join the basic mentorship, you will have priority access. Let me give you a life hack. If you want access to the masterclass, you can buy the basic membership first. And then you can immediately ask me for masterclass entry because I have priority access on the basic mentorship, which allows you to immediately access the masterclass. So that could be a way. But if you want to wait for the masterclass first, then we open up back in August. We open it back up in August. So in August, I would take a look at it. Fair value gaps and imbalances are the same. Yes. In EU at the moment, the daily structure has not changed. Can we say that then the 4 PD raise will drive price and so while other PD raise will cause a reaction, price will rotate at 4-hour period. Yeah, could very well happen. So, like you said, I think we still are heading higher. So, in the meantime, we could even see a 4-hour change. So that's why I didn't pay attention to this breaker. Why not? Because I'm still expecting higher prices based on the weekly and the daily right there. So then I would want to see the 4-hour maybe continue higher with a fair value gap, etc. Or we could see this breaker hold on EU delivering into that weekly fair value gap. So something like this. That could happen. I always get my buys correct, but I get FOMO and make an early entry like a turtle soup and lose. Then my stop loss hit and I will write my target. Any suggested engagement rules? That's a great question. So the first thing I would want you to do is maybe we'll go over the A to Z guide and figure out an entry pattern that you want to use. Because like you said, you probably don't have set engagement rules. And that is the problem, because then you FOMO in and then you think, all right, I have so much concept right here. I don't actually know what to use. So stick to one entry pattern and use that all the time. It could be 2022 model, etc. And then you also know you filter out something. So you have your engagement rules and now you know it might be a discipline issue, for example. So that might be the case. What's up, Kelvin? What's up? What's up? Great to see you here, brother. What's up? Say that I'm expecting a reaction off of a fair value gap. I entered, open, then it will fill the gap, and then dip a bit to my stop loss and reverse from that. If you do know that, then then I would say why not wait for that extra sweep, right? If you know price always hits your stop loss and then reverses, why not wait for that stop loss to be hit on your first hypothetical trade and then look for an entry? Even Hydra is learning here. No, I'm learning from Hydra. Hydra's teaching me here. No, I love to Hydra. Appreciate that a lot. Love that he's here, by the way. I absolutely love that. There's a lot of questions. Let me scroll through them. Which ICT Twitter spaces do you recommend? Hydra. Hydra only. Only study Hydra. Twitter spaces, I'm not sure. I don't actually... I'm not very much in... I'm not very much into Twitter spaces myself. I always increase my lot whenever I took a loss and it's wearing me out. That's a great observation to have though, because when you do that, you now know what you need to do. The only thing is, you need to do it. So once you know, the next time you start increasing that lot size, again, I'm increasing my lot size. I need to not do this. I need to break the momentum. I need to inject some logic to myself. And then over time, you will get used to it. Would you say every price move is market maker model in some sort of way, or would you disagree? Yeah, it could be. It could be a market maker model. I mean, there's nothing set in stone to a market maker model. As in, everything can be marked as a market maker model, and that's not a bad thing. But then indeed everything is a market maker model, if that makes sense. And a market maker model is, again, over glorified in my opinion, because if you use the tactic here, and again, I'm not taking a shot at anyone, but let me just explain my view on it. That's why we're here, right? So when we come into this daily fair value gap and we target an opposing discount rate, which is a daily discount rate right there, the swing low. This is a market maker model. What's happening here? I don't need to pay attention to the buy side curve. Why not? Because I have the daily on my side. The daily I already know. This is where I want to get involved. This is my target. In between that, so this price action from here to here, that is your market maker model or your market maker sell model. That is where I want to get involved. So right here, you only need to scout for fair value gaps and order blocks for premium rates to hold. And the only thing you need to do is enter here. Doesn't matter if this is an SMR. Doesn't matter if this is your first distribution. Doesn't matter if this is your second leg of distribution. It is fancy, it looks cool, but it's not necessary. That's how I have simplified market maker models. But again, if you want to use market maker models, I'm not here. I'm not someone to discourage you or say you need to use my stuff. No, absolutely not. Do what you want to do for sure. Do you hello? What's up? Do you normal and delayed day profiles, or are they also included inside your? Yeah, they are. That's a great question because I found that timings algo are not same now as it was defined in normal profile core. Yeah. If you go, I think this question was also based off the Killzone video, right? So when you know you have a delayed model or a normal model, they are already incorporated into my plan. For example, I already knew on this daily for value gap that we already had a sting. So the only thing I now need is a new move higher. That's the only thing I need. So in that sense, it is already incorporated into my plan. So that is for your Asia. If Asia is already expanding, etc., it is already incorporated into my plan, essentially. So yeah. And yeah, I noticed that a lot of times it is not a set thing in stone. And that's why with the kill zones, I said you need to react and adapt, because if Asia already comes into that discount array or high or premium array and already expands, then London will likely just continue of what it created, etc. Great stream. Hey, appreciate you, Mark. Can't watch till the end now, later for sure. No worries at all. Take your time, brother. No worries. Would you not do anything on Euro before the market is set tomorrow? I'm scared to trade more than one pair as I'm only 8 weeks in my trading journey. That is a great point, Gizmo. When you do notice that, then just focus on one pair only. Focus on one pair, because that is very beneficial for the beginning of your trading journey, because now you practice patience, etc. So focus only on one pair. You don't need to trade a lot of pairs at the beginning of your journey. It's just getting used to that patience, etc. Then afterwards, maybe after a few months, a few years even, then you can look at more. No worries, no need to rush. So tomorrow I wouldn't do anything. Like Jager, MMT member, I see you. Great to see you here, brother. So Mondays tend to be days where the market is trying to figure out what it wants to do. Exactly. Mondays tend to be rangy, and with Monday, you have a huge clue on what the rest of the week wants to do. Because if Monday is hovering above a discount array, then Tuesday might see a sting into the discount array, and then we continue higher, or vice versa, when Monday is hovering below a premium array. So yeah, appreciate your content, mate. Can you please touch on which zones can one trade mitigation blocks? According to you, which ones are high probability? You need to know which ones to avoid. Great question. So for mitigation blocks, let's see. The first thing I would say is mitigation blocks are actually just lower time frame order blocks. So right here, for example, I would expect higher prices off of this daily mitigation block right there. I always, for my mitigation blocks, I always would love to see a fair value gap overlapping with it. So on the weekly, it is just an order block, but let's just say this is a mitigation block. Because on the daily, it is a mitigation block. I would always love a fair value gap overlapping with it. So that's the same on, which pair was it actually? Was it USD Canadian dollar? USD Canadian dollar. So what happens usually is, if I can find an example. Yeah, gold. It was silver. Sorry, it was silver. So what you usually see is after this first move, you have a breaker. Right here, fair value gets offered. So fair value is already in the market. What happens after? You have a new fair value gap lower and a mitigation block right there. What then happens is the mitigation block, usually the low or the high, is already enough with an overlapping fair value gap to continue lower. We don't need to come all the way into here. We don't need to come all the way into here. When we truly have a mitigation block, this is enough. Touching that low with an overlapping fair value gap, that is enough to continue lower. So that is something to take a look at. That is how I prefer my mitigation blocks. What prop firm do you use for futures? I have actually never in my life traded futures. So I've always used CFDs. So yeah, it's a bit different. I meant difference between FX futures and spot FX market. Which one is better to trade? Do they move together? Depends on FX futures. Do you mean the pairs or the thingy itself? The futures contracts on the currencies itself? that might be a little difference. Thank you, Mitch. You're a legend. Thank you. Is there a strategic way to know that price will reject a fair value gap by institutional order flow entry drill? That's a great question, and that's what I've been trying to simplify as much as I can. The only thing I can really say on that is by knowing the momentum. So I just touched on breaker blocks and mitigation blocks, right? The same thing applies to when we now have very high momentum. So we already had a breaker, we already had our mitigation block, we are close to the drawn liquidity. That is when you usually get institutional order flow entry drills. So we are moving away already. So for example, same thing could happen here on the lower time frame. From this order block until this high, this section is where you look for entries. So on the lower time frame, we might get an institutional order flow entry drill. So I don't know where it is. Maybe somewhere around here, maybe on the 5 minute, a very small entry, and then the momentum is high, so boom, and we swing higher. But a strategic way, a mechanical way, I would say not that I have found yet. Not that I have found yet, but I might still get there. But the only thing I know of that is by having your drawn liquidity, and then we are close to the drawn liquidity. And close, with close, I mean determining your swing rates. So, for example, right there, if we have your swing rates is 0.75, that's where you mostly see another entry, then I would expect high momentum and just a sting into fair gap and then continue higher. But it's difficult to tell sometimes whether it will be an institutional order flow entry drill or a bigger retracement. It's uncertain sometimes. Bah. You can make your bread and butter settle with 15-minute sweep of liquidity and then wait for a market structure shift on lower time frames, 5 to 1M. It could be the case, but a lot of people don't make it work because they don't incorporate the higher time frame. Still Netherlands. Hey, love to see it, Jagger. Love to see it. Where you're at? You're in Amsterdam or where are you at? Yeah, it nifty on the daily time frame. It is absolutely a nightmare indeed, like you say. Back nifty. All right, this is nifty 50. Oh, for real? Is there? I didn't even know there was a difference. Oh, this is bank nifty. Okay, my bad. So we took this all-time high. Gee, what is happening here? Monthly volume imbalance, but again, on Nifty there are a shit ton of volume imbalance. We have fair value gap sitting right there. Weekly, daily. This is very ugly price action. If I was to base it off the different Nifty, which has also similar price action, I don't know which one is the leader. So either Bank Nifty or the Nifty 50 is the leader, but I would still say lower prices off of here. That's the only thing I could think of, just based off of the other Nifty. But this price action is very ugly. On your favorite entry model, you don't wait for fair value gap before entry of the fair value gap. On your favorite entry model, you don't wait for fair value gap before entry of the fair value gap. I'm not sure what you mean, my brother. I usually tend to, the video, if you're talking about the video I made, it was also an entry on the fair value gap. Damn. Let's see. Yeah, exactly, Fabian. There's no difference between an imbalance and efficiency. It's the same thing. What's up, Nick? How you doing? Just catching up from the beginning of the live. I'm late. Hey, love to see it, brother. Take your time. No worries. Love to see you here. Order pairing. Order pairing below old high / low. So order pairing, again, that is you have to understand the reason why I'm doing this in the first place or teaching, etc., is because so many things can be simplified. Order pairing is nothing more than just liquidity getting combined with other liquidity. So if we take this low, for example, below this low, we have a sell side liquidity. So that gets matched with buy side liquidity, aka new buyers right there. So what happens is we reject above it. When institutions truly want to buy, we obviously reject higher. So then we use the concept I'm teaching on A to Z guide on rejection, which is then coming above, back above that high. That is your order pairing. And then we continue higher. So then you know your order pairing is established because institutions are not wasting any time to stay below that low because they are truly buying. That makes sense. What's up, Agent Pepsi? How you doing, brother? How you doing? Love that. Love to see it, bro. When you identify chalk, do you use just a wick or full candlestick close? That's a great question. So usually I only use wick, but you could, if you find that the wick sometimes fills still, so the chalk doesn't follow through, then you can use full candlestick close if you prefer that. I totally agree with you on that market maker model. Love to hear it. Yeah, it's don't get me wrong, market maker model is nice, but it's like every single concept out there currently. It's superly over glorified and not over glorified, but it doesn't have to be that complicated. You don't have to pay attention to the first leg, to the SMR, to this, to that. It's, yeah. But again, that's my opinion. If you don't agree, it's perfectly fine. What is the difference between liquidity sweep and order block? Liquidity sweep is a liquidity sweep, and an order block doesn't have to sweep liquidity. So this is a liquidity sweep, for example, and this would be an order block. This order block doesn't sweep liquidity right there. The unicorn setup. The unicorn setup is if you truly, wait a minute, if you truly want to learn more about the unicorn setup, check out the guy Hydra in the chat. This guy is the master of unicorn setups. He has breaker blocks with fair gaps. I think if he still does it, I believe he does. That man is a unicorn. He's the definition of a unicorn. It is a breaker with a fair gap. I also have a video on it if you would like to check it out. The video is called The Strongest Algorithmic Something Something. It's a breaker block something. It's not in the HC guide, but yeah. But the Hydra is your man for that. Hydra is your man. Thanks, bro. To be honest, my pursuit for market maker model knowledge is inspired by you. I remember you saying to go wherever your eye is drawn to the most. I appreciate the help. Hey, love it, Jay. Love it, Jay. And yeah, you're completely right, right? Jay, me talking about the market maker model and my opinion in it, it's not me trying to take a shot at you or anyone that's trying to master market maker models. Absolutely not. It's just my opinion on it. And like you said, right, if you want to trade market maker models and whatever you like the most, go trade that. Go pursue it for sure. Go trade it. But yeah, that's the main thing I'm trying to tell you. It's not a shot at you or anyone. Not at all. I don't need you to stay here or anything. Don't get me wrong, right? It's all love, all love. So go get it, Jay, and keep me updated, brother. Keep me updated. Currency futures, all right. Currency futures, all right. That is, I actually don't know. I'm not familiar with spot currency, but yeah, I'm actually not that familiar. I think the only thing I can think of is that the contracts are different. So spot, you are literally just buying a currency. Futures, it's a different contract in a sense. So that is the only difference I can think of. So you never traded futures. What are CFDs? I've traded futures as in I trade the ES futures on a trading view chart, but I don't actually execute on a futures broker. That is what I've never done. CFDs are futures, but in SORMs, but the contracts are different again, and it is more comparable to Forex CFDs. Kisses you upon thy forehead. This guy. Thank you, brother. Thank you. Appreciate it. Swing grades. Swing grades. It's called swing grades. So if you have a swing grade, for example, you draw a swing grade from where you expect your drawn liquidity to be. So for example, here, the drawn liquidity is right there, that low. So what we would do here, we would expect a setup on 0.25, 0.5, and 0.75. And this is your drawn liquidity, aka your terminus. This is the high. So this could be a high that is reaching into a premium rate rejection block right there. And then you expect drawn liquidity to get taken. And right here, what happens is 0.5 is where you also see the most consolidation because it is equilibrium of this range. So entry setup, consolidation, silver bullet, 0.75. No, I was me referring to you coping with where. Oh shit! Oh my bad. I know you're still in your bunker in Norway. I know it. I see you. That's why I hear nifty traders still make more money with good full SNR. Yeah. Yeah, true. What is SMR? Yeah, smart money reversal. Exactly. I guess. No, you're right. You're right, Rowan. Don't doubt yourself, brother. You're right. You got this. Let's see. Stick to one model. That's it. Yeah, fact. Stick to one model. That's it. Yes, I'm from Amsterdam, Fabian. Yes, sir. Yeah, E7 and Euro USD very similar. Bro, any tips about New York session, bro? Because a lot of news is there. I wait for news to finish and the tips gets my setup and clears my TP. What to do in your opinion? Oh, a lot of news is there. I wait for news to finish. If the news is not CPI, FOMC, or NFP, you can get in during that news. So then the news just provides your low resistance liquidity run. That is how I do it. I think our market making models are overpowered. Like if you master them properly, you can do. Yeah, true. Very true. For sure. Immediate rebalance is also dubbed as one of the strongest. Yeah, true. Immediate rebalance is also a very interesting topic. All right. Perfect. I'm going to end it here. And I want to thank you all. Thanks, I'm a mentorship member. All right, let me go over this one last question. I can't help myself. When is it safe to trade in direction of order flow after retracement into discount? Example, ES. When is it safe to trade in direction of order flow after retracement into discount? When you have your lower time frame entry pattern. That is when it's safe. And when order flow is confirmed on the low time frame, but then you would have to contact me in the community because that is mentorship specifics. All right, perfect. Thank you, everyone. I'll see you at the next one. Thank you, everyone. I am going to rest now, getting ready, prepared for next week. Again, remember what we talked about, remember what we touched on, and I will see everyone at the next one. Thank you, everyone, for being here. Love you all. Thank you. And I will see you at the next one. Perfect. Thank you.